Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're doing well. So lots to look at. We have earnings approaching at the end of this week, Thursday and Friday. The financial sector starts earnings. We know the financial sector has been the weight of the S&P 500, the anchor, I should say. So that's very important. We have to see bullish reaction for follow through on the bull break we got Friday. So SPY on Friday clearly broke the 4-hour pattern that we've been watching for well over a week at this point, about 7 days. And it was a clear bull break, occurred first at 273.30, and then the more cautious traders got follow through and confirmation over 273.87. It took a little while in the morning for me to be on board with the bulls, and that's because the financial sector was not following along. So while we broke bullish in SPY, we had not broken bullish on XLF yet. Eventually, towards the later morning, the XLF bulls did start to break some resistance and they showed up in a big way, but they started the morning weak and they started the morning by breaking a couple support levels. So they finally got their act together. But if we look at the 4-hour time frame, we still don't have a very clear break. I'm just looking at lower highs. So we still have lower highs on the 4-hour time frame for XLF, and we need to see this pattern break and the bulls get follow through in order to be looking for the S&P 500 to continue on its bull break that certainly ended the week strong. So here's the daily chart for XLF. Still clearly choppy, still lower highs, and we look at SPY, and it was that pattern until the last 2 days gave a very clear bull break to have us looking back up at the next resistance of 278.23. So that's the only resistance level we're watching in the short term. Actually, there's one more here. I would say 276.72 first, and then 278.23. If we get a bullish reaction to the financial sector on earnings, we're going to head up to these levels, in my opinion. If we get a bearish reaction to these earnings, we're going to be looking at a potential bearish reversal head and shoulders pattern on the daily time frame. Let's look at it on this chart so I can draw. But on SPY's daily chart, we have to be watching for this because we could see the anchor of the S&P 500 drag the market down if we see a bearish reaction to earnings. If the price makes it up to fill a little gap here, 278.06, and see some further strength and follow through, then I will be looking at this being a negated pattern, but it is still valid at this point, and I am still keeping an eye on it. So bulls definitely in control of the short term. Anything above this base of support now is a higher low on the weekly time frame. You can see we held that middle Bollinger Band support, keeping the weekly higher lows, and we're heading back up towards recent resistance. The only way that we're going to see the bears take over at this point is a clear break of 268.49. That's now our new benchmark as to who's in control of this market. And as long as the weekly higher lows are maintained, again, I keep having people that are trading on fundamentals are pointing out all the similarities of 2008 and red flags and crash and all that. That's fine. Be prepared for whatever scenario you think is going to play out. But until the weekly uptrend is lost, I don't want to hear anything about the bears because the bears aren't proving anything. So that's what I'm watching now, 268.49. Bulls strong. We'll look if we get follow through. Break of the 4-hour lower highs on XLF to start this coming week would be the ideal scenario heading into their earnings and obviously for continuation on the S&P 500. IWM is already hitting new all-time highs. So we know IWM has been the leader of these markets for the last 2 months. We broke 168.36. That's very notable. We only broke it by 8 cents, not a very strong break at this point, but we closed really strong, 4 big green days in a row, and we will probably need some healthy consolidation in the short term, but this is a great sign, new all-time highs, V-shaped recovery from the pullback, and bulls looking for continuation, new higher low to keep the uptrend intact here is now 160.50. So this consolidation on all these markets did give us new clear weekly support levels to try and maintain this uptrend. QQQ in the tech sector also making the bull break with the S&P 500. Daily gap has been filled. We're looking at 176.37 and 177.98, the all-time high. So the financial sector, I should say the tech sector, is right there for all-time highs, heading back up to those levels. And we know that the tech sector has been strong. We've been watching Netflix, the bull flag on the weekly time frame, trying to see follow through to new all-time highs. Amazon bull flag on the weekly, also close to those all-time highs, and Facebook as well with the new all-time high. We were watching that perfect bull flag as well. So we knew that if we broke bullish on the S&P 500 4-hour pattern, that the tech sector names were going to be going for their continuation towards all-time highs and confirm the bull flags. And at this point, the most important short-term thing is the financial sector earnings. After those get done, it will be the tech sector earnings, and we'll see if this market can head back to those all-time highs. The tech sector is just fine in terms of positioning for the market to head to those all-time highs, but the financial sector has to get its act together and has to see bull reactions. Otherwise, those all-time highs are not going to happen. VIX on the daily chart breaking down. So the bulls were trying to hold support, and every time it was just a little bit lower, and now falling apart, closing down at the low. We saw the lack of support in this range, and we're looking down at 13.11 and 12.18 as the next levels, and the weekly time frame pulling back, the middle Bollinger Band rejecting the price 4 times in the last couple of months, and we're looking down now. Bulls are trying to form a higher low compared to 11.22 to keep a little bit of progress that the bulls have put together since April, but obviously not a very strong chart, and the shorts of UVXY and TVIX were having a really good day on Friday. That's where we stand as we head into this coming week. Bulls in full control in the short term. Short-term consolidation will be healthy. Keep your eye on the 4-hour time frame for XLF, and we'll see what the end of the week earnings do to start off the financial sector. Thanks again. Have a great rest of your weekend.